Over the last 2.5 years, we've seen the Perth property market grow in value like no tomorrow. We've seen 100% capital growth in some areas, but now that prices are so expensive over there, what is going to happen? And is there still room left in the market for some more capital growth in Perth? So let's unpack this and jump right into it. My name is Adam Panisi. Like and subscribe to this video if you want to learn how to make money from property. And I'm going to teach you from my own experiences having transacted hundreds of properties. Everyone talks about how diverse Perth's economy is and how it's changed so much over the years and it's so stable. But let's actually have a look at how diverse their economy actually is, because if you have a look at the mining output, it far exceeds every other industry. In fact, if you have a look at Western Australia as a whole, mining output almost makes up 40% of the GDP, and that was only in 2023. And the other sectors which are massive as well, financial and insurance services, lo and behold, they'll be off the back of mining. And the other one, professional, scientific and technical services, again, off the back of mining. And they both make up a significant chunk of the industry. And if you jump back up to the top, back to manufacturing, guess what people are manufacturing in Perth and Western Australia? They're manufacturing for the mines. So it doesn't take blind Freddy to work out that mining makes up a big portion of Western Australians and Perth's economy. So if mining falls, so does everything else. Let me show you exactly what this means in terms of employment numbers and then how that's going to correspond back to houses. Since mining is the single biggest contributor to Perth and Western Australia's economy, and if that falls, so does the rest of the market, including the property market. So let's have a look and break down what part of the mining is actually made up by what commodities. And you can see on this graph, iron ore makes up almost 50% of the mining in Western Australia, closely followed by gold, which I was actually quite surprised that gold was so high. And I actually was surprised that coal sits down at 0.7%, which is pretty crazy because I thought coal was actually a lot bigger in terms of their economic output. But you can see iron ore makes up a massive chunk of Western Australia's economy. And I know people are going to say, oh yeah, but what about all these other minerals like lithium? It's 7.6%. That was probably non-existent 5-10 years ago. So lithium makes up a big percentage. So let's just have a look further at iron ore. And if iron ore falls, what's going to happen to, firstly, the job market, but secondly, how much money people are actually going to have in that economy. So now let's have a look at how many jobs the mining industry actually employs. And this is direct jobs in the industry. So as of 2023, according to the Western Australian Department of Mines and all that stuff, in 2023, there's about 130,000 people that were employed in the mining industry. So just remember that number. So remember that iron ore makes up almost 50% of the mining output, which means just by correlation, it should make up about 50% of the overall mining jobs. And you can see in this chart here, it almost does. So iron ore employs, as of 2023, about 60,000 people. So almost half of the mining industry workers. Let's take this back to basics. If there's less people employed in the mining industry, that's going to have a direct impact to housing and the demand for housing, and ultimately the prices that people are willing to pay, both for rentals and also for purchases. So if we've just established that mining makes up 40% of Western Australia's economy, plus the associated services, that could be easily tipped to well over 50% that mining contributes to the Western Australia's economy. And we've just seen that mining jobs make up 130,000 people, and specifically iron ore makes up 60,000 of those workers. So it's pretty fair to say that if, say for example, iron ore reduces in price or the output of iron ore reduces, there's going to be less workers needed in that industry. And less workers means less demand for housing, because there's going to be an unemployment in that industry. And don't forget about the associated industries that have a ripple effect as well. When one person gets unemployed in the mining industry, what is that ripple effect into other industries within Perth and the greater Western Australian economy. So we've worked out that iron ore contributes pretty substantially to the economy in Perth and Western Australia. But what if we look at the output of iron ore that's forecast over the next few years? It's not looking to crash hot, and it's not looking that crash hot because of a couple of different reasons, one of which I'm going to go through very shortly, which is the price of iron ore, how much the miners are actually selling it for. But you can see that our output is going to reduce. And if our output is reducing, which is that top blue line, and this is iron ore, which makes up almost 50% of the mining in Western Australia, if iron ore reduces, what is going to happen to the workers of that industry? Let's just say conservatively, based on this graph, iron ore output is reducing by about 30%. So if we apply that same ratio, just thinking logically, if we say there's 30% less workers needed in iron ore, that means that those 60,000 odd workers that are directly employed in mining from iron ore then reduces to about 40,000 people. So that's about 20,000 people less that's needed in the industry according to this forecast output. Those 20,000 direct jobs, what is going to be the impact holistically within Perth and within the Western Australian economy when those miners get laid off? And it's not a matter of if, it's a matter of when. One factor affecting the iron ore output is actually the price of iron ore. It has dropped quite a bit over the last little bit. You can see from this graph, we're not doing terribly, but in terms of its relative value versus the last 10 years, you can see it's not really that high by the time you take into account inflation, wage growth increases, all of that stuff. So mining companies are not going to be making as much money now as what they were over the last few years when the price of iron ore was higher. In addition to this, there's actually some really big mines being opened up overseas that are supposedly going to be producing a mass amount of iron ore, keeping that whole industry under wraps, and in other words, supplying to that industry quite substantially over the next 5 years is their forecast. Plus, you've got some other things happening in China with the slowdown, and I'm going to show you in a second who our biggest purchaser of iron ore is. And the biggest purchaser of Australia's iron ore is China. So if China stops buying our iron ore, who's going to take up the slack? And if you read the headline news, China is in a slowdown with their economy, their construction industry has reduced, and the main input or the main reason we sell this iron ore to China is for them to manufacture steel. So if their demand for steel is less, then our output, our supply over to China is obviously going to be less as well. I've just been ripping on Perth's economy for the last little bit, and I'm normally not much of a pessimist, but I'm seeing so many people buying over in Perth and still seeing stars in their eyes that the market's going to just keep booming. But there's going to be a time where the music stops. And it's about pinpointing when is that time going to be, because in a market like Perth that is traditionally a boom and bust, and I think it will follow suit again, you need to know when to get in and when to get out of the market, and that time is quickly approaching. So let's then translate this mining industry, a number of jobs, back to dwellings and dwelling values. So the first part we need to look at is the dwelling approvals. What is happening with dwellings? Because if there's still an undersupply, irrespective of whether people are being laid off in the mine, if we have no housing, it's going to keep pushing prices up. And if investors interstate are pushing those prices and throwing more money down, then the price is going to keep ticking up. And we're going to still keep seeing this growth, even if mining jobs are being lost. So dwelling approvals are really important. And you can see that there's been an uptick over the last year or so with the number of dwelling approvals. So that's the last part of the graph where it started to uptick again. And that's pretty normal. When a market booms, we normally see more houses getting built to fill that undersupply. So first of all, how well is the property market currently doing in Perth? Vacancies normally tell a pretty good sign with how the property market stock is being taken up. So you can see that the vacancy rate is still quite low, but it's definitely not the lowest that we've seen overall. But I also have some issues with this graph because when I started to look at certain areas around the city, the vacancy rates are actually quite a bit higher than what this graph actually shows. And it's sitting, by the look of this, around about 1% in terms of overall vacancy rates. Remember, we've got more dwellings coming. That approval of dwellings hasn't yet hit the market. So those building approvals, they'll be underway getting built. A portion of them won't be built, but over time, they're going to be delivered into the market. And over time, this vacancy rate is going to go up, irrespective of the mining jobs. Let's just move those to the side for the moment. So I'm going to show you some particular pockets around Perth CBD to show you what the vacancy rate actually looks like at the moment, and also what dwelling approvals are coming up online. Because the dwelling approvals is one part of the equation, which is the supply into the market. And then you've also got the demand, which is obviously the mining jobs and also that growth in the economy where wages are going. If wages are higher in mining, which they are just by nature, versus if there's more unemployment or there's immigration, who are these immigrants that they're bringing in? Are they going to be workers? Are they actually going to be able to afford to pay rent, or are they all going to be living in the one house? So there's a bit of an equation that most economists get it wrong. Everyone guesses, and this is only my hypothesis, just based on what I've seen in past cycles and also having been in mining towns like this, where the market has come off really hard, really quickly, because mines have just laid off a whole lot of people. So I'm not here to scare you just yet, but this bust is coming and it's just a matter of time. And I'm going to pinpoint some certain pockets. Some are doing better than others, but overall, Perth's market will be saturated, and I believe it will bust in due course. I'm first going to look at Swan, which is in Perth's northeast. It has about 75,000 dwellings, which if you apportion that to a population, it's around about 200 and something thousand people. If it's about 3 people per property, it's around about 220 odd thousand people that live in this area. So it's a pretty substantial amount of people that live and reside in Perth's northeast. And you can see on the left-hand side, there's virtually no stock on market. The inventory, the stock, will only take under 2 months to sell. The hold period, don't worry about that. The building approvals is what I want you to focus on. There's nearly 2,000 building approvals at the moment. Now, this isn't stock that's been completed, but this will be under construction. This will be in planning, about to start construction. So there's a big wave of supply coming to Perth's northeast. If you have a look at the demand on the right-hand side, there's only 36 days on market. It's a very tight market. Vacancy rate is quite low, 1.25%. Now, what's going to happen as these building approvals hit the market? That vacancy rate is going to spike. It's going to go up. The days on market are also going to go up. And I haven't even mentioned about the mining downturn and the loss of jobs. So this is just one factor, one area. Let's have a look at another area within Perth. Next area I'm going to look at is Mundaring, if I pronounced that right. It's in Perth's east. There's about 15,000 dwellings, which equates to about 40 odd thousand population. You can see stock on market's low, inventory is low, building approvals look pretty good in this pocket. The vacancy rate is low, days on market is low. So this suburb looks like it's probably going to outperform the last one that we looked at in terms of growth over the short term, that is. And again, this isn't taking into account loss of mining jobs either. So this is just the suburb as a whole. But obviously, if there's an outside factor like people losing their jobs, then people are going to be moving out of the area. They're going to be searching for cheaper properties if they're unemployed or if they're earning lower income, or they're going to just relocate completely in search of job, in search of work. All right, next area I'm going to consider is Wanneroo, which is on Perth's north or northwest in the outer ring. It's got about 70,000 dwellings. So again, it's around about 200,000 people live in this area. You can see stock on market is hardly anything, 0.6%. Inventories under 2 months. Again, if we have a look at those building approvals, there's over 2,000 building approvals. It's starting to get up there in terms of supply. So now we got to think about the demand. Will the supply that's coming into the market, will it actually be taken up by the market? So days on market is low at the moment. Vacancy rate is starting to tick up close to 2%. And at 2%, it's about a balanced market normally, as in balance between renters and people wanting to rent their property out, landlords. So this area, once all of those building approvals are going to hit, you're going to have an oversupply in this outer ring. And again, I'm not taking into account those mining jobs where if they get lost, then this supply is obviously going to be well and truly oversupplied. So this wave is coming. I'm going to show you some more evidence. Next pocket I'm going to look at is Stirling, Perth's inner north. So there's about 100,000 dwellings or close to it. So almost 300,000 people. So a lot of people in this pocket. Stock on market, again, is low. Inventory is lower than 1 month. Building approvals are also low, and that is on the supply side. So from the onset, this area doesn't look like it's going to be oversupplied anytime soon. However, days on market is 31. Vacancy rate is 0.83%. So this area has all the good things, all the good items for a recipe for this area to keep going nuts and going up in price, providing that there's affordability in these pockets, of course. And I'm obviously just considering the whole area, not individual pockets. So this area looks pretty good. It looks like it's going to withstand, the test of times. However, you need to take into account that mining output is going to be reduced by, 30 to 40%. So again, although all these stats look really good and all these people looking in, all these investment groups are going, yeah, Perth is going to keep booming, buy in this area. There's going to be a time where it comes where the music is going to stop. And that time is coming. I'll tell you at the end when I think that's going to happen. All right, last area I'm going to look at within Perth is Joondalup, which is in Perth's northwest outer ring. It's got about 60,000 dwellings. And I was quite bullish on this area about 18 months ago, and it's done phenomenal growth out here. And you can see that it's got the best stats in terms of council region. It's got extremely low stock on markets, low inventory on the left-hand side, virtually no building approvals, 300 building approvals in the pipe. Days on market are still pretty low at 34. You've got a low vacancy rate at 1.6%, although it's starting to creep up again to that 2%. And that vacancy rate has reduced over time. So again, this suburb looks like it's better, definitely better than the first couple we looked at. However, you got to take into account the mining downturn that we are going to have, in my view. When I predict the Perth market will actually bust will be upon, one, the supply of all of those dwellings coming to market. And because Perth's market is so small in terms of the greater region, people don't have that far to drive. If you're going to live north side, south side, obviously people will make a choice there with where their kids go to school, where their employment is, but you don't have a huge commuting distance. So in areas like this, the market gets oversupplied as a whole. So when the market is oversupplied, obviously oversupply is the killer of capital growth. So once we start to see these building approvals come online, probably over the next 3, 6, 9 months, the market, in my opinion, is going to be oversupplied just from the building approvals alone. And then we couple that with the mining downturn, where we're going to be losing, 30% possibly of our mining workers in that iron ore industry. And as long as that continues and those workers don't get sucked up by something else like an infrastructure project, then that mining turn coupled with that oversupply in building is going to mean that prices in Perth are going to decline. So my crystal ball is, I think we've got maybe another 6 months left. Some areas are going to feel the heat earlier than others where they're already in oversupply, where the prices have grown massively. But other areas that are going to withstand it a bit better, where prices haven't grown as much, where they're still cheap in relation to the surrounding areas, they might make it to 6 months. They might even go a little bit longer. But if it was me betting my money, I'm not personally investing in Perth at the moment because it's a matter of time. It's not if, but when the market comes off. And my crystal ball is it's probably going to be in the next 3, 6, or 9 months. And different times of that window will depend on those factors that I've just mentioned. So thanks so much for watching. Tell me what you think, and if you're investing in Perth, if you're bullish about the market, or if you own property in Perth and you want to get out of that market, let me know. below, and also where you're investing in at the moment that you think is going to be a better return than investing in Perth and Western Australia.